Today, Martin, we're going to talk about two big IT giants from the US.
Correct.
And they are not the most, if I may say so, the most sexy shares.
No, they're not.
We're going to talk about IBM and Intel.
Correct.
And they exist for a long time. And why we're going to talk about them? Because it are shares that a lot of investors do have in their portfolio. Mm-hmm. And they're like, we can call them sometimes sleepers because people have them for a long period. Yeah. And I think that we want to dive a little bit further into the background, into the strategy, and into the figures.
Correct.
So that people can decide from themselves, hey, is this sleeper, is it worthwhile keeping them in my portfolio? Should I invest in them if you don't have them? Or should I kick them out? And I think the conclusion will be, of course, they do different things, but the conclusion is it are completely two different shares.
Yeah, and also different approaches found for both of them, yes.
I think so.
You want to kick off with IBM?
IBM, what I always like is that a company exists for a long time, especially IT companies, because of course I think in the latest future, IT-related things has been changed a lot. IBM exists for more than 100 years, and I think that shows something. If you are in the IT sector and you can survive 100 years, it's in your DNA to change, to adapt, to change your strategy, your vision, and to be successful. So I think that works in their advantage. Yeah. I have some fun facts about IBM. I didn't know, but some of them, yes, I want to share them with you. But because of the computers of IBM, the first man on the moon could land there because I think almost all the computers in the Apollo was from IBM. And also they were the first who had a smartphone. I think there is no smartphone anymore working on from IBM at this moment, but they were the first. So you see also they had a good vision, but the execution wasn't good because there is no IBM phone anymore. And I think also if you go back to the first smartphone, I think it was not called the iPhone 1, it was called the iPhone. That was auctioned this week. Mm-hmm. And it was still in the box.
Really?
Yeah, and it was $60-something thousand paid for one of the first. It was not the first, but one of the first. New in the box.
Funny is that.
And also I think that's really nice that 5 former employees of IBM were rewarded with the Nobel Prize for Peace.
That says something.
That says something, and that's also, if you read about IBM, the culture with IBM, it's really like, of course, US companies normally are really hard, internally, and IBM has, to the outside world, a little bit the feeling of a family.
Yeah, no, it seems like it, yes.
A little bit
but you're very much talking about, I want to be part of this. Let's give me some financial information.
Yes, Martin. IBM sold their infrastructure company Kyndryl, if I pronounce it very well, in last November. Mm-hmm. And at that moment, they said, okay, we're going to more focus on our 3 main income streams. That is software, 41% of the revenues, consulting, 33% of the revenues, and infrastructure, 25% of the revenues. And then you have 2% left for the people that made the calculation that is coming from investments that they have. Yeah. And so what you also see that they come from a hardware company, but that's only like 1/4 of the remaining revenue. So that's important, I think, to say. If you look back on the figures, they came with the yearly figures on the 26th of January. The figures were good. Mm-hmm. The share lost 4%. There we go again. And they were good on an annual basis.
Not good enough.
No, not good enough, but also they were good on a yearly basis, but the main profits, the main gains they generated were the first half of the year, not the second half of the year. If you look at 2022, the revenues grew with 6% and the earnings grew with 15%. And I think that's quite good in challenging times that they are in. If you look at the share price, I have it here in my chart, goes back to 2018, but if you look at the last year, it was almost flat.
Yeah, that's
so it outperformed. If you remind, we are investors, so we have short memory. But the S&P 500 lost a lot last
Yeah,
year.
2020 Intel for IBM was flat. Yeah.
Yeah, flat.
Yeah.
So I think it was really boring, but in this case, really positive if you're boring in 2022.
Absolutely.
If you look at the outlook, the CEO promised the investors that especially the software and consulting departments would grow a lot. Two figures digit percentages, high in 80-90%, and that is not the case because they have macro headwinds, and that's especially you see that back in the software and consultancy, and the currency headwind they have, and that's mainly in the infrastructure sector because there they sell big mainframes and storage places. So
they still do that, yes.
So they have in all the three sectors headwind, but despite of that, they had a really good figures in 2022. Okay, but as investors, we look forward, and if you look at the estimations of the market, revenues and profit-wise, they will grow a couple of percentage in 2023. And the earnings per share will be estimated, but if you look at the history, it's quite stable. It will be $9.50. So that you, with the share price of $130, you are on an average of 14.
Yeah, that's not bad.
40% price earnings. 2024, again, a little bit of growth is expected. And I think a lot of people have it as a sleeper in the portfolio because when they analyze the stock and they look at dividends, they see, oh, wow, I get 5% of dividends.
Correct.
And that's quite interesting, I think, in these times.
Yeah, definitely.
And I think to conclude, it's a safe stock in a bear market. It's a safe stock in general. If the headwinds will take away, then it can grow a lot. Yeah. If not, it will grow a little bit. It's not exciting. It's not a sexy share, but the dividend and the change that they did and more focusing on the cloud services, I think it's a sleeper, but it's a good sleeper. In
yeah, and people also, if you look at the analyst rating here, it says hold.
Yeah,
you can hold it.
Yeah. It's a sleeper. Hold it.
Yeah, with Intel, it might be slightly different story. Yeah, they also exist quite a long time, 1968. So they were actually the first processors. Everybody that has a laptop or a computer at home has a small sticker on it, Intel Inside processor, hubbledepup. They were the first chips that were used in iPhones. They lost that in 2020, and that was already the first hit in the face that they got. And if you look back, since 1990, there's an S&P Global Market Intelligence system to calculate how companies are performing. It's the first time since that moment that actually Intel has a negative capex, it's negative capital expenditure. They are actually spending more money than what comes in, and that's not normally very good. If we look at the figures from 2021, you talked about earnings per share. They were earning $4.86 per share, and they are down now to $50 per share. How did that come? They had a lot of things going on and not very positive. They lost a lot of market. First of all, Apple, of course, they are making their own chips. Then we had a loss of market share to AMD and to Taiwan Semiconductors and Nvidia. So they took a lot of their capacity and they basically lost that. Then their fabrics, the way they produce their chips is old-fashioned. So they had to now actually outsource the production of Intel chips to Taiwan Semiconductors. Well, if you can't do it yourself,
that's not a good sign.
It's not a good sign. And another thing is also, and that was not frontline news, they had to pay an amount of 950 million, almost 1 billion to VLSI Technology because they used their patent and they said it was theirs. So the judge said, no, Intel is not yours. And in total, apparently there's a total sum of 2.3 billion that they will have to pay, including this 950 million on patent usage of third parties. So they are not really doing a good job. What are they doing now to turn this around? They are heavily investing in Europe. They presented a plan, and that plan was presented in March last year, 2022, to start producing chips in Europe. And I think that is quite interesting, where you see a big Swift ASML, for instance, that went to Taiwan, of course.
Why do they do that?
Yeah, I don't really understand it. What they literally say, with this landmark investment, Intel plans to bring the most advanced technology to Europe, because they believe in the knowledge and the expertise of European people. They create tens of thousands of jobs. In France, they will invest in a massive 5,000 research and development center. And in Magdeburg in Germany, they are building at this moment, it will be delivered by the end of 2024, a 17 billion leading edge factory for chips in Germany. So yeah, all in all, if we look from a fundamental perspective as a share, this year they expect a loss of $1.3 billion. So that is, yeah, of course, if you want to invest, you're literally investing with Intel in their future. So that's something to think of. You need to make a vision for yourself about, yeah, the success possibility of this company. They still have a little profit per share, but of course in total it's not enough. It's not enough to get the total company into a positive territory. Their debt is more or less 40 billion. That is not increasing a lot, but they're spending they have 180 billion of cash, of which they're spending, yeah, quite substantial amounts. So the question is, are they capable, as Pat Eglinton, the CEO, is saying, to turn this around by 2025? That is basically, yeah, that should be the first light on the horizon for Intel, in which all their investments are going to pay off or not. So interesting story. I think it's a company, we all use their chips in our computers. It is the truth. That's why they did a lot of good for us. I really hope personally that they are capable of turning this massive headwind, because they're literally in a storm. IBM has some headwind, they are in a tornado, they're really suffering, that they're capable of turning this around.
Yeah, I think it's very interesting, because a lot of investors, those two stocks, Intel and IBM, look a little bit the same. All shares, and everybody knows they have some struggles. But if you go one layer deeper, or maybe two layers deeper, there's a big differences. IBM is a boring share. IBM, but still 5% dividends.
Yeah.
And I think if you decide for yourself, if you want to invest, if you believe the strategy, but it will take years to come out, then you should invest in it. But always take in consideration, I think it should be one of your basis lines. Do I want to invest in a share in a company that makes losses, or not? And that's a lot of companies or a lot of investors don't want to do it, but you can do it, and it can be a really nice profit for you around the corner.
Definitely. I think with Intel, it's important also to look what are the competitors doing, because of course everybody, and maybe go too deep into it now, but the globalization and might be this and that. So they are one of the first players that made a statement: we are going to invest in factories where we are in Europe. No.
Mm-hmm.
So if you have belief in that story, I think you can consider.
So I hope we gave some extra background information on this. On the first side, not too sexy shares, but there is a big underlying difference. So thank you for watching. Give it your thumb. See you next week.